Hello, everyone. Welcome to another masterclass series that is presented by Byrd. And together today, we are with Uncapped, one of our partners, and we'll deep dive into finances today. We are right on time, so I don't want to keep waiting the already joined audience, and we will basically just go ahead and start and just a check-in. If you have any questions during the webinar, please feel free to post them in the questions, and we will do our best to respond to them after the presentation in our Q&A section. That said, I'm excited to welcome Dominika and Jamie. And hey guys. And we're going to talk about securing sufficient stock levels and realizing your growth potential. I think this is a very hot topic, especially during approaching peak season. So that's why we definitely wanted to have Uncapped in our masterclass series. So thank you guys for joining and being with us today. So we basically will talk about financing and growth, and I'm really excited about the learnings that we will get from Dominika and Jamie today. Just a bit of background on our speakers. Basically, Dominika is the partnership manager at Uncapped, and she has different experience in banking, finance, and international business all across different sectors. And basically, they're building future of digital banking in Uncapped. And Jamie, he's the head of strategic partnerships and general counsel at an Uncapped, and he also had quite a bit of experience in international law firms and also in venture capital funds. So if you have any questions specifically for Dominika and Jamie, please feel free to shoot as well. And me, as you might have heard of me in the last webinar as well, I'm Sinem. I'm the new chief of staff. Basically, I've done partnerships at Byrd, and now I'm transitioning to chief of staff role at Byrd. And very happy to be here with our partners today. That said, basically, I've given a bit of context about Uncapped already. So they are basically, and Dominika will walk you through a whole presentation, but I just want to make the intro, basically how the company was born and funded to enable merchants for providing different financing options available for European entrepreneurs. And we will basically hear a lot more on that. As you know, we as Byrd, as a third-party e-commerce fulfillment logistics company, we help merchants to outsource their fulfillment efforts across Europe again, and make sure that we have a good service level after purchase for the merchants in general. But that said, I made a real quick intro, so I want to basically shortly pass it to Dominika to take over and tell us a bit more on financing. Today's agenda is basically here. Basically, cash is the king, what Uncapped does, and the Q&A session that we will have after the presentation. And that's it from my side. So passing on to Dominika. Welcome again.
Hello, can you hear me okay?
Yeah, perfectly, loud and clear.
Thank you. Thank you for the lovely introduction, Sinem. So let's kick off with the main problem. So everyone in business knows that cash is king. And when you are an e-commerce company, nothing changes. Cash is still king, but it becomes even more essential in the peak season. The cash flow gap resulted from the increased demand for your products around Black Friday or Christmas time can have long-term negative effects on your business. So during this time, you are more likely to experience stockouts, inconsistent sales, and stagnant growth. After all, if you don't have a steady stream of cash, you're not going to be able to buy more inventory when you really need it. So your stock level differentiates you from your competitors. Every time that you fail to meet the demand for your products, it stops you from a huge opportunity to expand and scale. So as an e-commerce business that aims to grow, you need to consider taking on some additional capital in order to consistently add fuel to the fire. So I have a question for you now. I think it's in the poll section. Have you ever experienced a stockout situation due to the lack of cash to finance inventory? Let me check how it looks like. Polls. Yes, it was submitted. So if you could just answer the question that was submitted in the polls section about whether you experienced a stockout situation due to lack of cash to finance inventory in the past. 3 votes. Yes. Very well. Cool. So let me go to the second slide then. The traditional financing market for e-commerce companies is broken. Bank loans, selling part of your company, or liquidating your own assets, or asking friends for cash are the only sources of inventory funding available to e-commerce businesses. The accessibility of such options, however, varies. One must meet strict criteria to qualify for bank or equity financing, and few are fortunate enough to receive money from family, as we all know. It can also take months until funds are transferred, which further aggravates the already mentioned stockout problem. So cash flow issues, putting one's house on the line, or giving up control over one's business are just some of the many costs and risks associated with securing money for inventory. Another question I have for you is whether you already used inventory financing solutions in the past, either one of those in the table here or some other ones. Could you please submit your answer in the poll section, please? 80% said no. So I'm really glad that I'm having this webinar today to tell you more about the options that you can use and about safe options that you can use. Let me introduce then the concept of revenue-based finance, which is a safe alternative to secure inventory capital. With RBF, businesses can access capital in return for a fixed percentage of a company's revenues. So let's say a company is offered 100,000 euros for a revenue share of 5%. It means that for every sale made, the company would repay 5% of the amount until the total of 100,000 euros has been paid off. So if revenues slow down, so do the repayments, because repayments track revenues. For instance, if the revenues are typically 100,000 euros and they suddenly slow down to 50,000 euros, and there can be a lot of reasons for that, such as the global pandemic, the business would still pay 5% of this revenue. So repayments would drop proportionally from 5,000 to 2,500 euros. So thanks to the flexible nature of such financing, there are no longer the same cash flow issues typically caused by traditional bank loans, where a monthly interest payment needs to be made, whether there is cash to pay for it or not. It's a safe alternative for founders because you only pay back if you generate revenues. My question is, were you familiar with revenue-based finance before? 100% no. Ooh, it's changing. 5 more seconds. 67% of people haven't heard about 71 about revenue-based finance. Let us wait a couple of more seconds. Okay, I can see that the majority haven't heard about it, so I'm going to dive deeper into it on the next slide. Because our company, Uncapped, provides access to fair and flexible finance for online businesses, aka revenue-based finance. It helps businesses raise growth capital without interest, personal guarantees, and other hidden charges to worry about. We're a technology business at heart. We are data-driven, and thus we can make fast decisions and provide unsecured, flexible finance to e-commerce companies. Are you willing to give a personal guarantee to obtain inventory funding? Yes or no? Please answer in the poll. Six votes, no. I thought so. You wouldn't like to put your house on the line just to get some money to finance stock. That is why we provide capital from 10,000 to 5 million euros. We charge a flat fee of 6 to 9.5% on the amount given, and we get repaid by a revenue share. We typically agree on a revenue share between 5% and 20%. A good way to explain it is, of course, through an example. So let's say that we offer a company 100,000 euros. We then add a fixed fee of 6% to the principal amount, which then equals 6,000 euros. And it means that the firm would repay us in total 106,000 euros. We then agree on a revenue share with the firm that we then fix for the duration of the advance. In this example, let it be 10%, right? So the revenue share is 10% in this example. It means that for every sale a company makes, it would pay us 10% of the amount until the total of 106,000 euros has been paid off a few months later. And that's it. There are no other fees, personal guarantees, or equity involved, and nothing is paid up front. Additionally, we work very quickly. Clients can apply in 15 minutes and receive a decision and money often within 2 days. We can provide you with more money just when you need it with no additional costs. And our legal agreement is short and transparent. It's written in straightforward language, and we received lots of good feedback about it. So to sum up, it's quick and safe. Now that you are more familiar with how the model works and how our facility can help you with inventory financing, let's focus on some numbers which depict the opportunity of using Uncapped as a vehicle for your growth. As you can see on this slide, there are two very different scenarios. The first graph presents an e-commerce business that finances its store by reinvesting 100% of its own profits into inventory. And there's actually nothing wrong with this. In fact, a lot of companies and brands who tend to bootstrap their businesses turn out to have great foundations to scale and become successful with just some additional injection of capital further down the line. But now let's have a look at a company that uses uncapped funding to steadily add more inventory without being held back by a cash gap or insufficient profits. As you can see in this scenario, the first red bar illustrates our capital injection, which in terms of value is slightly higher than that month's revenue of the business. Together with our capital, the company would be able to invest much more into stock. If we assume that the company sells out all of its stock, this will consequently result in doubling its revenues the next month and building up momentum for the business to reinvest more, sell more, and become more profitable. And keep in mind that those figures already take into account our fees. If I were to quickly sum up the peak season challenges of e-commerce businesses that can be solved with revenue-based finance, I would focus on the following things. So, firstly, with this external flexible capital, you will effortlessly meet the demand for your products, be able to sell more, and never run out of stock. Secondly, with sufficient inventory levels, you will ensure generating positive reviews, retaining your customers, and you will keep increasing their lifetime value, which is, as you know, truly essential for e-commerce stores. And thirdly, with our funding and your generated revenues, you will be able to explore other channels in the future, devote more money into marketing, acquire more customers, and grow even faster. On the right-hand side, you can see a picture of Andre, who founded an electric toothbrushes company and struggled to meet the demand for products that placed enormous pressure on cash flow. Uncapped funds allowed him to respond to this increasing demand without delay, finance his production, and grow the company's revenues by 82% in just a quarter. Another founder, Tom, is a founder of a company called L'Estrange, a menswear company. He found himself in lack of cash situation for stock after devoting his resources to paid advertising. So he started conversations with banks that required a personal guarantee that Tom really didn't want to give. And he approached Uncapped and got approved for 75,000 pounds the next day. And thanks to the speed and flexibility of our funding, he decided to continue working with us and came back for additional 7 advances, totaling 750,000 pounds that he directed into funding stock and accelerating his business's growth with paid marketing. If you are curious how much you are eligible for, you can just give it a shot. There is no cost to exploring your possible options with Uncapped. The process is really, really simple. You can sign up via the QR code or this link over here and fill in the application form with some basic details. The next step would be to connect your various sales and marketing platforms via secure APIs in our portal so that our tech engine can understand your current situation. The whole process takes up to 15 minutes. And finally, within 24 hours of connecting your platforms, we would make our decision and hopefully present you with an offer. Once this is done, it's all up to you whether you take it and grow your business or you figure it out on your own. Thank you. Now it's time for questions. We don't have any questions in the questions section, but I'm ready to take any questions.
Yeah, thanks a lot, Dominika. I think it's quite interesting. Basically, I'm sure we will have questions coming up. Before we deep dive, maybe one of the frequently asked questions from our customers as well. Does that sort of like revenue-based model also help on season peaks, like the peak season now we are facing with Christmas, and how does your customer tackle with that?
Yes, definitely. It's actually perfect in this timing. So we can provide access to inventory capital in this peak season. We can act extremely fast. So whenever you have a situation that you need cash right now, you can just approach us, and within 24 hours you can get additional funding. So yeah, definitely we work with businesses like that.
Cool, nice. And I think we have the first question from Judith. Is it also for startups that are not yet on the market? Is it possible to use for launching the stock with no sales history, or you have to see a certain history? If yes, how long of sales history you need for the decision making?
Yeah, definitely. So before we make an investment, we first must see a sales history of at least 5-6 months because we are fully unsecured and we take our payments directly from companies' revenues. So we need to see some revenues. So the answer to this question is we cannot, unfortunately, work with you if you do not have any history of revenues. However, with e-commerce companies, after a couple of months, you already have a history of sales. And after a couple of months, we are more than happy to give you funding to grow.
Thank you. Another question from Alok is, do you fund startups in India also? Maybe you can mention a bit about the geographies that you work with to cover which areas you work with.
Yes, definitely. So we started Uncapped in London in 2019, but right now we are present in the majority of European countries and in the United States as well. Unfortunately, we haven't entered the Indian market yet. So we can, like, if your company is also registered in somewhere in Europe or in the US, we can of course discuss helping you. But unfortunately, in India, not yet.
Yeah, I think depending on the market they're tackling, I guess, and the sort of where the company is, it's Europe at the moment currently for us as well. So if you are planning to expand to Europe, maybe that might be an interesting proposition.
Yes, definitely.
For you. Another question from Sebastian is, my peak season is almost over. It was summer. So how will this affect your search engine's decision as my sales are now slowing down?
That's a really, really good question. So we can definitely work with seasonality. So if you have a strong business and of course, there are some periods in the year when your sales are slowing down, but then there are some periods when your sales are picking up. Then definitely we can discuss your situation. We have like a case by case approach. So we always talk to businesses. We try to understand their needs. We try to understand their situation and come up with the best solution. So yes, the answer to this question would be, it depends, but we are willing to talk. And definitely, if your business is strong, then it's just approach us and let's talk.
I think like having a revenue-based capital model actually helps with seasonality in comparison to other funding. If correct me if I'm wrong, other funding options. So that kind of like matches the needs of seasonality as well. I guess, or am I wrong about that?
No, definitely. Like with revenue-based finance, the only thing that we need to see is that your company is going to generate revenues in the next couple of months. For instance, we usually provide our companies with a couple of financing options. So not only one offer, but a couple of them, so the customer can choose between them. So we can provide with a higher amount or lower amount depending on the revenue share that we agree on. So for instance, if your revenues are slowing down because of seasonality, you can choose an offer that puts less pressure on your cash flow in the next couple of months. So you can just choose revenue share to be a bit lower in the slow season. Jamie, if you want to add something, you're more than happy to.
All good.
All good. Cool.
Cool. Do we have any other questions from the audience, mainly on sort of like the... Yep, we have another one coming in. How is the percentage defined for the repayment? What is the consideration there? What influences the percentage of the revenue that you get? Is it a condition I'm free to set, or is it defined by Uncapped? Okay.
So as I said, we typically provide our clients with a couple of offers. They can choose the revenue share. The rule is basically that the higher the amount that we offer to companies, the higher the revenue share. So we do not want to, as I said, we do not want to put too much pressure on companies and their cash flows. That is why the company can choose between different options. So yes, definitely, you are free to set that. However, bear in mind that if you require more money, then the revenue share will be probably higher. However, it's very interesting here to also mention that our facility can be treated as an ongoing credit line. So you can today take, I don't know, 100,000 euros for us, but after you repay 50%, you can take more from us. So we can top up the amount whenever you need it. So it's totally up to you which option you choose, whether you come back for more money or not. Sinem, you're on mute.
I muted myself in between. Sorry. No, that's fair. And I think like to get more kind of like information and insight, like Dominica mentioned, it's quite easy to get a first offer to try the chances there.
Yeah, let me also tell you that we have we like the personal touch, so we really like to get in touch with companies first, to jump on a quick call, understand their needs, their situation, seasonality as well, and we try to come up always with the best solution for the company. So we never put our clients at risk. So we need to be sure that we always take the best approach with the companies that we work with. Yeah,
Right.
is there another question on the right-hand side?
Just checking. No, I think we don't have any questions, but we still have a couple of more minutes if there are still questions from the audience on the details. I think it's quite interesting, also, especially for sort of like this season and on the seasonality topics that we discussed. So feel free to post the questions. Maybe on our side, I think it's worth mentioning. Also, we do have a partnership with Uncapped, so you can always kind of like we will be sending them information emails, and you can always sort of work with Uncapped together with us as well. That said, I think we don't have any more questions, basically. So I'm gonna thank sort of like all of you for joining. And we kind of like prepared a discount code for the audience, or Uncapped generously offered it actually for the audience. And you can basically with the discount code get a discount for your offers with this webinar using code byrd, and basically get funded for growing your businesses.
So if I can just interrupt, so if you're interested in how much you're eligible for, please just sign up through the link get.weareuncapped.com/byrd, or you can just mention on the call with one of our account managers that you came from byrd. I'm sorry, I need to drink just a sip of water.
Sure.
Cool, I'm back. So if you could just sign up for this link or let us know that you come from byrd, we are more than happy to offer a 5% discount on our fixed fee. And also, I just to finish with, I wanted to tell you that we are growing extremely fast, and we launched in October 2019 already. Since then, we have made hundreds of investments across Europe and the US. In the last round, led by Lakestar Capital, we raised over $80 million that we direct into funding other online businesses. We are founders for founders, and you can read about us in leading global press such as Forbes, Business Insider, or TechCrunch. You can also see here our investors. There are also White Star Capital, Moro Capital, Global Founders Capital, All Iron, and Seedcamp. I really wanted to thank you Thank you for your time and thank you for attending our presentation. We wish you all the best with the forthcoming peak season and scaling your e-commerce business. And we would love to find out if you could become part of the family of other successful founders who partnered with Uncapped. If you have any further questions, please contact me or Jamie directly or contact Sinem. You know where to find us. And here are also our email addresses.
Yeah, definitely. So, like mentioned, I think this is sort of like time to process, and for everyone just to be aware that we are always here to help, and you can contact Dominika or Jamie for your growth options, basically, for the peak season. I would like to just remind everyone that what's coming up next in the masterclass series. We will have Petra, our CCO, in the next webinar, basically talking more on a case study that we have with Primal, one of our fast-growing customers, Primal State, where how they manage and tackle hassle-free fulfillment with Byrd, and how we help them basically with their logistics and outsourced fulfillment. So if you're interested, please join us again next week, Tuesday at 5 p.m. CET. And basically we will discuss further on our options and basically how we can help merchants with their outsourced fulfillment. And thank you everyone for joining, being with us. Thank you, Dominika, and thank you, Jamie, once again. And yeah, keep us posted and speak later, and hope to see most of you next week. Thank you.
Thank you so much. Bye.
Thank you. Bye-bye.